Kingdom's Wealth and Wisdom, brought to you by Petra Worldwide. Here is Nathan Weaver.
Greetings and welcome to Kingdom's Wealth and Wisdom. I'm Nathan Weaver, founder and executive director of Petra Worldwide. For many generations, independent legacy leaders looked overseas to secure their wealth. They purchased villas in Southern Europe, raw land in Central America, or commercial real estate in booming overseas markets under a conforming historic assumption that what happens overseas stays overseas. They believe that because a piece of physical land rests under foreign soil, it remained completely invisible to their traditional tax authorities back home. But the era of the IRS looking the other way on offshore holdings is officially over. The IRS has spent millions of dollars, hundreds of millions of dollars, in building advanced international data sharing networks, executing cross border treaties, and enforcing strict disclosure laws. Under their current enforcement push, tracking global wealth and unmasking hidden foreign treasures is one of their absolute highest priorities. Today, we're going to talk about how the IRS tracks your international digital and physical footprint and the quiet traps of foreign real estate and rental income and the precise compliance rules that you must meet to ensure that your global wealth does not get eroded. In order for this to make sense, we have to get the baseline right. We have to talk about the underlying rules. And that means that you have to understand that IRS does not treat your offshore investment under local foreign laws or tax rules. They subject them to the direct United States tax code. This single reality changes your global financial liabilities completely. Every single time you buy, rent, sell a piece of foreign real estate, you are triggering a highly complex tax event. Let's look at the three most common tax events that are triggered. Foreign rental revenue. If your overseas villa or commercial flat generates rental income, that revenue must be reported on your U.S. tax return. You cannot hide behind a foreign bank account. The IRS mandates that global income is subject to U.S. taxation regardless of where that income is earned. Let's talk about currency conversion and capital gains because when you sell a foreign piece of property, you haven't just executed a local transaction, right? You must complete and calculate your capital gain or loss on that purchase, which means, you have to consider currency fluctuations. Those fluctuations alone can change the impact for you. And also, this is true for transfer of assets to foreign entities. Anytime you transfer an asset to a foreign entity, there's an additional set of reporting requirements that must be met.
Pastors and financial leaders, do you need expert accounting or tax help? Do you have payroll or 1099 questions? Do you need a ministry expert to help you acquire real estate for your next project? If the answer is yes, yes, and yes, visit petraworldwide.org. Petra Worldwide has been strengthening ministries to transform humanity since 2007. Visit petraworldwide.org or call 855-481-9095.
Under the current global compliance laws, there are over 100 nations that have signed into an information sharing agreement with the IRS. Furthermore, if your foreign real estate is held within a foreign bank account or entity, you are mandated in the U.S. to complete and file a FARBAR and Form 8938 under the Foreign Tax Act compliance or FATCA. Not completing these forms can be devastating when the transactions or the assets are identified. So let's stop playing hide and seek with our global assets and our global financial system and visit our website and join the KingLife community. The compliance obligations can be met and we can move forward.
Listen every day at 4 p.m. for Kingdom's Wealth and Wisdom, brought to you by Petra Worldwide, strengthening ministries to transform humanity. On the web at petraworldwide.org.